This is the Absolute Business Mindset podcast, created and hosted by Mark Hayward. This podcast will interview entrepreneurs, business owners, and people in their careers. We will delve into their journey to success, key life milestones, and go deep into their area of expertise. This podcast will inspire and educate with great guests. Get ready to learn from other successes and failures. Today we have John Briggs, who's the founder of Incite Tax. Hello, John. How are you?
Good. Thanks for having me.
Absolute pleasure. Thank you so much. Hopefully we'll have a lot of fun and we can talk about your businesses and your career and journey to where you are now. So we'll start right at the start. So why don't you tell me about Incite Tax? What do you do and what's the makeup of the business that you've got there?
Yeah, so right now we sit with about 35 team members. We focus on, we want to help our clients grow their wealth. The mechanisms that we've chosen to do that is through tax savings, cash flow management, and bookkeeping. And so those are the main three components of services that we offer. And it's just, we get a lot of satisfaction knowing that this is an area of the business that most entrepreneurs kind of run away from. But once they realize it's important, having, a partner like us in their life really helps them kind of bring the yin and the yang to their strengths. We bring our strengths. And now all of a sudden, instead of living paycheck to paycheck, these guys are able to save money, create a retirement account, have profitability so that they can actually expand their business. But yeah, we've been around for almost 15 years, and we continue to grow. It's a really fun and exciting time for our business.
Good. Why do you think entrepreneurs dodge these sorts of areas, accounting, tax, and those sorts of areas?
I think because for the few of us in the world that enjoy this, we're abnormal, and most people, it's just numbers and money. I don't know if it's a cultural thing or if it's a global cultural thing. I do believe somehow people are conditioned to think this stuff is super complicated, so don't even waste your time even attempting to try to figure it out. And then they get into things and they realize I should figure some of this stuff out a little bit because it might be holding me back. But yeah, I think maybe just people are conditioned and it's like an acceptable thing. But we're happy to remove that conditioning and at least get them to understand enough so that they can still run their business without spending a lot of time. And any good accountant, like people should be looking to have a good partnership with an accountant so that they can do the stuff that you for sure don't want to understand, but you understand enough that when you communicate with them, you can make better business decisions.
So I'm well behind the curve. I'm actually listening on Audible to Profit First, which I'm finding really interesting. I've got an accountant and we're working very well and we're trying to be a little bit proactive and not just reactive. But are you an advocate of Profit First?
Oh boy, am I. So
excellent.
Mike Michalowicz has become a really good friend of mine. And I remember when I read the book, I read the first chapter and I thought, all my clients need this information. Mm-hmm. Of course, I was too arrogant to think that I had any problem with my cash flow. Like, I'll learn this and I'll teach my clients. And then once I implemented it myself personally, it was awesome. But I don't know if you know this, but Mike actually opened it up a few years ago where, so I'm a Profit First professional, so I'm certified. And for those of us who are certified, he said, if you have a group that you're niching in, and you feel like the system is changed enough that it merits a book, we're going to license you the ability to write the book. So actually, last January, the January before COVID happened, I published Profit First for micro gyms. So I wrote the system specifically to help gym owners, boutique fitness studios implement the system in a way that they understand better than the original system.
Oh, interesting.
Yeah.
That's fantastic. I didn't realize he had that offer. That's fantastic. So when I was doing the research, it says your mission is to give entrepreneurs actual work-life balance so they don't need to get burnt out. How did you come to your conclusion that this was going to be your mission?
Well, I mean, to be fair, I've discovered the mission after experiencing working with business owners. And I've seen how burnout happens. And I mean, this plays perfectly into the profit first system. So if people aren't super familiar with it, the title profit first is super sexy, but really it's a cash flow management system that's designed to benefit the owner in a way that they're actually getting rewarded for all the work they're putting into the company. This isn't a thing about greed. It's a thing about just the acceptance that if the business owner is not earning enough money, at some point they are going to burn out. And a lot of times it actually hits them like a wall. I mean, we've seen this. Entrepreneurs are like paying themselves last is usually what happens because I got to pay this bill. I got to pay this bill. I want to invest in this. I want to get the money here. I'm going to sign up to get some more sales over here. Oh, I hope money's left over so I can pay myself. Mm-hmm. And they can keep doing that for a long time. But once they realize and they physically and emotionally feel that sense of, holy cow, look how much I put into this and what do I have to show for it? That burnout wall pops up real fast. And so having worked with business owners, I've seen that. And then helping them implement the profit first system, we've seen it's almost like a vaccine for burnout. Like we're able to then help them start putting money towards paying themselves first and saving money for their tax burden instead of covering that out of the personal stuff. And now they're going to be in business for as long as they want to be in business. And so that's kind of where through life experience, I found that the world will end up being a better place if the people who are passionate about the business, who've taken the courage to even do it, because that's a rare person to begin with, if they can receive the compensation necessary so that they can stay in business as long as they want to, the world is a better place.
Yeah. I agree with that. What do you think the one thing is that entrepreneurs should think about? So new entrepreneurs, so I'm coming up to a year. I left my corporate job on the 16th of October, 2020. What do you think for me and for other people in their first year, what should we be thinking about from an accounting point of view?
Usually, I mean, the first thing I would think about is generating income, right? So that's not necessarily an accounting function, but I've seen clients that wasted 5 or 6 years trying to write the perfect business plan when they could have just been out selling their product. And then they use that cash. Like we need cash. It's the fuel to run the business.
Yeah.
So that's the first thing. Don't overthink it. Like get to a point of making cash first. Then at some point you're able to, and usually because if we're startup entrepreneurs, your accounting needs aren't super crazy. And so most can get away with doing their own type of QuickBooks or even using an Excel file. But I think as soon as they have a little bit of income that they can start leveraging that money to free up their time, hiring an accountant should be one of the first things they take on. And the reason is because now you're going to get consistent reports that are probably a little bit more accurate than what the entrepreneur is able to produce on their own. And those reports tell a story, and they can help the business owner, which the accountant can train the owner how to do this, to interpret the numbers and kind of see the areas like, oh, I've just been so busy in the day-to-day, I didn't actually realize it looks like I'm overspending over here on office supplies. Or revenue really dipped this month compared to the other ones. I wonder what happened. So like the financial statements are trying to give you questions to ask yourself.
Right.
And so the sooner you can get to a point where you're getting those regularly, I think puts you in the seat for success.
We'll be back after a quick break. Hi, I'm Alex, the host of X Health Show. Meet the future of healthcare. Think X-Men, that's X Health. Actual superheroes behind programming living cells to cure cancer once and for all. Tech that detects preterm delivery in seconds, brain-computer interface, or apps that employ AI to match you, your disease, with the best treatment. X Health Show brings to you visionaries who push the boundaries of healthcare from Switzerland, the heart of Europe and the most innovative country in the world. Let me introduce you to their startups. Head to X Health Show, meet the future of healthcare. Happy to greet you there.
I would agree with that. I employed an accountant straight away, and we are just preparing to do the first corporate tax return, and we're just in that space now. So it's interesting. We use Zero with an X instead of QuickBooks. They're all those. I think those two are the best two that we've got in the UK. And it's really interesting you say that. I was listening to Profit First, and they were saying about if you've got one of these softwares, one of the things you should be doing is downloading to see where and download your profit and loss in essence, and see what you're spending your money on. Are you spending it on courses? Are you spending it on sales or marketing? Are you spending it on employees? What are you actually spending your money on to actually get an assessment? And I think from my point of view, although I've got this software, I never thought of actually leveraging the software because I was ignorance rather than anything else, rather than a lack of that motivation. But actually, I'm going to do that in the next couple of days and actually have a think about, well, what am I actually spending my money on? Is it, so I've got a property business. Is it just all on maintenance of the properties, or what are they spending on? So I will keep you abreast and tell you how I get on with that. So, because I think it'll be really revealing to see what I'm actually spending most of my corporate money on.
And so with the Profit First system, we actually recommend that you are sitting down no more than once a week or at least twice a month. That time period is sufficient enough. And there's other things you do. We can get into the system as much as you want, but one of the things that we recommend you do on those days is to look at the last few weeks. So if I'm sitting down every Friday to do this, I'm going to look at the last 7 days.
Yeah.
And I'm looking at every transaction because I want to know, and this is how business owners can stay on top of being financially healthy, because when you don't do this, your business gets fat and you end up having expenses that you're not actually benefiting from. And so we recommend going through those 7 days of expenses and just asking yourself, is this actually helping me produce revenue? Is it helping me with retention? Is it productive for my business, or was it like a nice thing to have, or I thought it would work and now it's not working?
Right.
As part of our services, one of the consulting meetings we have in the Profit First package is we sit down with the owners and literally dig into their expenses. One of two comments, usually both, end up being made. And entrepreneurs are going to resonate with this. One of the things they say is, I have no idea what that expense is for. That's a common one. Or the other one is, I thought I canceled that.
Okay. Like a subscription.
Both of those are immediate indicators of low-hanging fruit of expenses you can chop, so that your profit increases, because you already have, like, if you don't know what it's for, likely not a productive expense.
Yeah. I'm gonna tread on ground which is a bit shaky in the UK, and it's probably the same in the US. Tax planning. How do entrepreneurs choose the right approach for tax planning?
Yeah, I mean, the US tax code is like 77,000 pages. I imagine the UK tax code is equally ridiculously long. This is definitely not an area where I would ever encourage an entrepreneur to try to do it on their own. Bookkeeping is one thing, and I get, especially in the beginning, bootstrapping, trying to save cash. But because tax code can be so specific based on people's situations, you really do want someone you can advise with. But that being said, a good advisor is going to be able to look at your situation, and they're going to find even things like in the US, a simple thing is, do you even have the right structure? Is an LLC the right thing, or an S corporation or a C corporation? Like, that decision alone can make a massive tax difference. And then you get into all the other intricacies of, the reason the tax code is so long in the US, probably the same way in the UK, is that you have these lobbyists who are paid to go and try to influence the government to make law changes that happen to benefit the people who are paying the lobbyist. I remember when I was in college working on my master's degree, we spent an entire lesson going over the Microsoft tax code. Right. It was some section, I don't even remember the name of the number of the section, but the professor's like, this was enacted because Microsoft paid a lobbyist to get this in place, and it had something to do with software and the way people can expense it or depreciate it. But yeah, you need an advisor. Don't try to do that one on your own, because I think you kind of said, even with your thing, it wasn't a matter of lack of motivation. It was a matter of you just didn't know. So this is that same scenario. You don't know about, it's too much for a person who's not doing this day to day to stay on top of all the things that change.
Yeah. And my accountants told me about, there's different allowances that you can get. So I've got a property business that you can get for investing in your properties, that you can get relief from, and all stuff like this. That is well beyond my sphere of knowledge. So I would encourage any entrepreneur that wants to do their accounts and their tax properly, is get a very good accountant, get as best accountant as you can afford, and get them to work for you to get the best way of getting the right tax.
And a good tax advisor is going to be able to save you more money in taxes paid than what they charge you for their fees.
Yeah. Okay, so let's jump to your degree. So you did a degree and master's in tax and accounting. So let's go all the way back to there.
Okay.
What made you choose accounting and tax?
So I lived in Argentina for 2 years, doing some things for my church. And as part of that organization, you have a mentor, a person kind of in charge of the group. And I was getting close to the end of my 2 years, and I said, look, you've gotten to know me now for 2 years. What do you think I should do? This guy had been a mayor of his town. He was a successful business owner. So I really trusted his judgment. And he told me, based on my personality, he's like, you should go into do something in business or go into law. I'm like, okay. Turns out both of those paths. So I tried to find all the classes that were both of those paths at school. And accounting was one of those classes that I was going to have to take regardless of what I chose. Okay. Honestly, it was the first time in my life that a subject just clicked for me. It made sense. Physical science, biology, astronomy, history, none of that stuff makes sense to me. But accounting, debits and credits, I'm one of those weirdos. It just finally clicked. And I loved it so much. And so I went down that path. And then as you get further into the path, usually you can choose to become an auditor or a tax person. And I had done enough research and talked to enough people and found out if you have a tax degree, they'll always pay you more money after you graduate because it's a specialty. Even if I chose to become an auditor, they were still going to pay me more because I have a tax degree compared to the guy who just has a normal accounting degree. And so from there, then I got into the taxes and I realized, oh, this is fun. I love the game because the tax code is so complicated. If I take a deduction on a certain form, that might save the client even more money in taxes. So it's oh, you're allowed this deduction, but here's a couple ways we can take it. Here's the way to maximize your refund or lower your tax liability. So just that game, I loved it.
So I worked for PwC for 12 years in sort of tax area, and the number of people that when you're meeting people at events and things like that and networking, the number of auditors at PwC that after their 3 years of doing the accounting and training that were in audit were that we've got to get out of this. We've got to get out of audit. Where can we go? And there was two other options. There was the tax that they could go into, or they could go into sort of management consultancy, which some did. But there were a lot of people who were thank God those 3 years are over. I'm qualified now. I can do something a bit more fun than counting bricks or the funniest thing I heard was a guy who lived in the Midlands, so the middle of England, and he worked for, I don't know if it was JCB, but one of these big companies, and he had to go in and count the tractors. And I was just like, that is actually the best auditor you could ever find, isn't it? You're checking how many tractors are in there. Now, checking for a business can be really boring, but going in and seeing how many tractors, I thought that was. But yeah, the number of people who start in audit and then move at PwC is huge.
Yeah, and for every poor auditor who gets the blessing of counting actual tractors, you have 100,000 of them who had to count the tires.
Yeah.
Or I remember, so I worked at Deloitte, and even on the tax side, they made you do a week of audit.
Right.
And literally for an entire week, so 55 billable hours, I had an Excel file, and I'm clicking the ending balance and I'm clicking the beginning balance, and I had to click a macro. And literally for 55 straight hours, click, 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 click. I'm like, this is. Why would anybody? I wouldn't wish this on my worst enemy. Like, it was terrible.
Okay, now this is really interesting. So you worked at Atlas Marketing Group, and the thing you said is that you learnt that there are greedy, lazy, and overpaid people out there. I don't know if you were mentioning people at that company or not, but that was something you learned from working at that company. So how did you what made you think about greedy, lazy, overpaid people in that arena?
Oh man, so Atlas Marketing was a summer sales, door-to-door sales company. So they would find college students, and then the college students would go out to different areas and they knock doors. And this particular company sold Dish Network, which at the time was a lot bigger than DirecTV, and they sold DirecTV as well. So I was the first controller they had, and they'd been around for about 5 years. I'm going into these team meetings, the leadership meetings with the president and the vice presidents, and I'm like, hey, you guys, okay, here's the deal. For every sale that we're making, I've just ran the numbers, we are keeping $8, which was a 1% margin, which is not a sustainable business. And they're like, yeah, what's the problem? We'll just sell more. I'm like, so even if you sell 100,000 units, that's $800,000 of net income. Like, you guys are burning money so fast. So I said, there's this crazy idea that's sweeping the business community, and I think if we implement it here, it's going to make a drastic change. They're calling it a budget. And these guys were like, oh, we don't need a budget. You're so paranoid, John. We're just going to sell more. Well, the year that they did almost $30 million in revenue, they declared bankruptcy. And
their expenses, their expenses were just so high. Yep. What were they spending it on?
Well, the president drove an Aston Martin.
Okay.
So his monthly payment was like $5,000 a month. A couple of people had some Ferraris.
Right.
One of the guys, I don't know if you've ever seen the movie Gone in 60 Seconds with Nicolas Cage.
Yeah.
So Eleanor.
Yeah.
For the movie, they made 3 Eleanors.
Right.
He owned one of them. He
Wow.
bought it. Literally a sales guy would come in and say, hey, I need to install a theater room in my house because I'm going to be able to recruit a whole bunch of sales reps. And like, well, how much money is that? I need like $30,000. Cool, man. Just make it awesome. Like, wow. That's why I'm greedy and lazy. All they did was spent energy on how do I spend money, yet they did nothing to actually go out and earn revenue. And they're actually the poster child of the what happens when you don't have a profit first system.
Yeah.
Because $30 million in revenue, they should have been fine. But they had no boundaries around their cash, and they just didn't care to put them around it.
Interesting. So how long did you last there?
Well, I went down with the ship. I tried to help them all the way through the end. I think I worked there for about 2.5 years.
Right. Okay.
And the last 6 months, it was post bankruptcy, like trying to see if they can recover.
Terrible.
Yeah.
So then you cut your teeth at, is it Solents?
Solents, yeah.
Solents.
Oh, yeah.
And you found about maintaining books, tax returns, researching tax issues. So was that a better experience that you had there?
I wish. I feel fortunate very now that I had those 2 first jobs out of college to really shape what has happened to me, and I think what we've been able to accomplish here at my firm. But so post bankruptcy, or even before bankruptcy, I saw the writing on the wall, so I knew what was happening at Atlas Marketing. At the time, my neighbor had just started an accounting firm, and I'm like, hey, look, while I was in college, I worked at Deloitte. I have a master's degree in tax. I enjoy it. Let me go back to that. And so I ended up talking him into hiring me. He was the owner and founder of Solents. And about 2 weeks into that job, he's like, hey, based on where we're at as a company and what you're doing for the company, I think it makes sense to give you some ownership. And I was like, heck yeah. Oh my gosh, this is amazing. So he gave me 2.5% ownership, just 2.5%. But at the time in my life, I thought that was the coolest thing ever. Little did I realize in the US, there's a fun little law that says if you don't have enough, like, you always have to pay your W-2 employees. That's a legal obligation you take on when you employ them. If someone's a partner in a business, there's no legal obligation to pay them.
Oh, no.
Now, at the time, it wasn't a big deal. Things were going good. He and I were working hard. We brought in, there was another guy so there's 3 of us who are partners. Obviously, I still have the 2.5% ownership. And about, 3 years into it, he's like, my mom's getting ready to retire. We're going to buy her firm and we're going to merge it with ours. Now, if anyone's listening and you're an entrepreneur and you're thinking about merging, please do your due diligence. In this case, it was the majority partner's mother. She had been in business for 30 years and her gross revenue was $80,000.
Right.
That's terrible.
Yeah,
we can get an experienced accountant here with 0 billables, and within a year they'll have $150,000 of revenue in 1 year.
Right.
30 years, 80.
I was going to say, how did she keep the business going for 30 years?
With credit card debt, because then what we also got by buying her firm was a $4,000 a month debt obligation to help her pay down her credit cards.
Oh.
So after we pay off the credit cards and some of the staff to help with the work on all her clients, we were probably $100,000 of expenses. So we merged with the firm and our net income decreased drastically because of it. And so now we have son, mother, the sister/daughter was the office manager. She loved to be on Facebook. She did not love to work. So I got to this point at the end of my relationship with Solents where I'm like, gosh, when I'm going out and networking and bringing on clients, I do the work. And when you guys bring in clients, the few times that happens, I do the work. And it's like, I'm doing all the work. You guys are just taking money out of the business because you're the majority shareholders. I just don't feel like this is a fair relationship. And we got to the point, this is where the 2.5% ownership mention comes into play. The last 6 months that I worked there wasn't enough cash to pay me. I got paid $2,500 in a 6-month period.
Wow.
While the sister, who's on YouTube the whole time, made like $20,000 during the same time period. Because I tried to convince them, I said, like, I can answer phones. Let's get rid of her wage. We can't even afford her if we can't afford us as partners and blah, blah, blah. Because they weren't pulling their weight. So I left, and that's when I created Incite Tax.
Right.
And so then we've been here ever since. But for me, those 2 business experiences, working for Atlas and then Solents back to back, literally eliminated all possible problems that entrepreneurs might have when they need to take the leap.
Right.
I had nowhere else to go but up.
Yeah. Yeah.
I mean, I worked at a post-bankruptcy company that couldn't pay me for very much for the last 6 months of it. And then I worked at a firm that didn't pay me very much. It's like, look, where are you?
Probably the best education you could have as an entrepreneur, wouldn't it? Isn't it?
Yeah, I mean, and at the time I would have told you I wasn't an entrepreneur. So I didn't even realize that I was being taught how to be an entrepreneur, but definitely it's so well said. I went to a very conservative university and they taught us get a job. Job security is working for a big company, like a PwC or a Deloitte. And now I've learned after working for, I would say a company that does $30 million in revenue is a big company. After experiencing that, to me, the best job security is waking up every day unemployed, which is what we do as entrepreneurs. We are required to go out and create value. And by doing so, we get compensation back. I would rather have all that control in my life than give that control up, because I had nothing to do with the bankruptcy of that company.
Yeah.
The president's spending all the freaking money. I don't get a say, yet I lost a job while he still had his Aston Martin.
So you've mentioned people like PwC and Deloitte, and we've both experienced the big four corporate. What's your view on those types of businesses? And you can smash them. I've got whatever you feel.
So we literally were at a university 2 nights ago talking to some of their junior student, like the students in their junior year. And we wore a T-shirt that said, "The Big Four suck." I don't like their model. I think from my industry, from the accounting industry, their model actually is ruining the industry. And what it does is it's forcing accountants out. I mean, you described the auditors. It's the same side on the tax side. So it doesn't matter what side you go on. Typically what happens is they come in and they say, okay, January to April 15th, tax season, or if you're an auditor, it's January to March, right? Everybody has 2 busy seasons, whether you're an auditor or a tax person.
Right.
And during those busy seasons, standard with the Big Four is minimum 55 billable hours, which usually takes about 65 real life hours because not every hour is billable.
Yeah.
That's if you want to keep your job. So then if you want to stand out amongst the other colleagues who you're competing against for promotions, you got to work 75 to 80 hours.
Yeah.
And then in year 3 or 5, a headhunter is going to call them, a recruiting company, and they're like, "Hey, I got a job for you over here in a private company." And they're like, "Yes, get me out of this place. This is terrible." So now we had someone who at some point actually enjoyed accounting, and the Big Four models snuffed their passion out of them. And now they're working for one person as opposed to the ability to work for many people. Yeah. And so at our firm, I am audacious enough that I am trying to become significant enough that the Big Four can't ignore my model, and they'll have to change the way they treat their employees so that we can keep a lot of this great talent that exists. We can keep them working. Because again, like I mentioned earlier, I think every entrepreneur should have a partner, an accountant type of partner relationship. And if they're leaving because some company, the way they treated them makes them feel like they don't want to do it anymore, because they don't see the value that they're offering the world anymore. And it's just too much. It's too big of a price for them to pay. So
there's a lot in those Big Four companies. Hours. I didn't see my second daughter for pretty much 3 years of her life. So hours were a little, and again, it's called politics. It's called playing the game. You have to play the game as well, and therefore you're saying you still have to do the billable hours, but then you've got to play the game as well, and you've got to do all the things that are supplied around that as well. It is a tough environment. I stuck it out for 12 years at PwC and 2 years at KPMG, and I've had enough.
Yeah.
Please don't let me go back.
I think the lesson an entrepreneur can take out of this story is that how are you creating your company? Because even if it's just you right now as a one-man show, at some point you're going to grow enough because you're doing great things that you're going to need people to help you. And how are you going to treat that person? Because hopefully if you're going to invest in them, you want them to invest in you. Let's have a caring concept. Let's care about these people as opposed to treating them like you're a throwaway, because that's how the Big Four does it. Like, they know that the average accountant is going to last 3 to 5 years, and they're just going to keep cycling through new students and new blood.
Yeah.
Like, let's not do that as owners. Let's actually create an environment where people want to work and want to stay working, and then they buy into what you're doing.
One of the things I really struggled with, and something I've done with people, colleagues, peers, employees, is the simple thing. If someone does a good job, you say thank you. You say, well done. Thanks a lot. That was great. I never got that at all. Ever. And no, hardly ever. I suppose you got that with the bonus that you got, which sometimes wasn't great anyway. But do you know what I mean? When I work with people, I'm very conscious of, if they did a good job, tell them. Make sure you tell them. They'd probably say I go overboard on it, but it's like just those simple things made a big impact on me. And therefore now when I work with people, if they do a great job, I tell them. And I kind of make a point of telling in front of my partner, my business partner or whatever, that they've done a good job, because it just was completely starved in all my time that I was there.
And it's not just the Big Four. A lot of these Fortune 100 companies are kind of stuck in the old ways, and they just haven't updated anything. Like, there's so much data that supports a thank you actually is it's better received by that person than a cash bonus. Here's an idea for entrepreneurs. We do this in our company. We have a 90-day trial period, and once our team members done with the 90 days, then they get a full employment agreement. And we have them fill out what we call a Dream 101 list. It's based on the book Dream Manager.
Okay.
And it's just like 7 or 8 questions, like, what are places you want to travel to? What are things you'd buy? What are hobbies you want to take on? What are talents you want to develop? That gives us a crazy amount of great ideas, so that when they do a good job, we actually reward them with something off of the list. So, for example, we finished a tax season, and I had one team member, I'm like, man, he did a great job. I could have given him like a $5,000 bonus. Instead, on his list was, he loves golf. So I'm like, you know what I'm going to do? I'm going to buy him custom golf clubs.
Right. Nice.
And so I set him up. I said, okay, hey, Lynn, you and we're going to go to meet this client. It's a new client. I think you're going to get along with him really well. And we show up in the parking lot, and I said, okay, I lied to you. We're not actually here to meet a client. We're going into this company right here, and they're going to watch your golf swing, and they're going to fit you for custom golf clubs. He still talks about it, and every time he golfs, he gets those clubs out, and he knows that I'm thankful for what he did. Yeah, and the custom golf clubs only cost me $1,500.
Yeah. I think that's amazing. I think that's a really, really positive, and it's a great reward for something, and it's meaningful as well, rather than just a cash lump, which sometimes is useful, sometimes it's not. Very generic question. I think we've covered it kind of in the Profit First stuff earlier on, but is cash king in 2021? Well, not necessarily post-COVID, but after COVID, a lot of companies have had to go through without having income. Is cash king?
Yeah. Cash is always king. Like, literally, our heart beats the blood through our system. The cash is the lifeblood of your business. Like, you can't grow without it. You can't stay in business without it. You can support periods of time where you don't have it with debt, but that debt's got to be paid off at some point, and cash does it. So it's super important that owners focus on having healthy cash flow, because that's really the foundation to do all the other stuff that they want to do. But without it, whatever passion they have, whatever value they're trying to bring to the world, it just can't last without healthy cash flow.
And just on that, you mentioned debt, which is an interesting one. What's your view on leveraging debt and getting debt to invest in a new product or service? Or, like, for me, leveraging debt might be for a property or something. What's your view on the role of debt now? And I don't mean credit cards. I mean, like, sort of corporate debt that you get for buying assets or businesses or property.
I definitely think it's a valuable tool. I want business owners to do more research, though, before they take on that debt. Like, what is your actual business plan? whatever you're investing in from a corporate level, how long is it going to take you to get revenue? You need to know that number, because you need to know how much extra cash you need to sustain the debt that you just took on before the investment actually starts to pay off. And then you need to plan, now that, like, let's say you get that past that point, now you need to plan to use the revenue that was generated to accelerate paying down that debt, so that in the future, when an opportunity arises, you have the ability to repeat it. I personally hate dealing with banks, though. It drives me insane. I don't know how it is in the UK, but in the US, they have underwriters, and they base their decision off of tax returns, yet none of the underwriters actually understand the tax returns. Right. But it's the foundation of their decision. So what I've done using the Profit First system is I actually set aside a percentage of my income, and I created my own line of credit account. And so when I have an opportunity to come up, I borrow money from myself, so I don't have to charge myself interest, but I do pay it back. And now it's just even less risk when I invest in something big. But no, I'm not against the idea of leveraging money to invest in an asset, as long as you have a plan and know when you're going to be able to pay that investment off.
Yeah, because the worst thing is defaulting on a payment, even for 1 month, can be an absolute nightmare for you.
Yeah, or investing in something that at the end of the day doesn't even work out.
Yeah.
Do your due diligence on whatever you're looking to do before you take on the debt.
Absolutely. Okay, so what's the plans for Incite for the next 2 to 5 years?
We plan to grow. We want to help more small business owners. And so it's doing what we're doing now, just a lot more of it. We do have some fun things. I mentioned I don't think very highly of the Big Four. I don't treat people very well. One of the things that we're doing is we want to have a world-class training system for our new employees. So I've been kind of working on that, and we're calling it the Career Roadmap, which isn't a fancy title. I'm sure I've heard it from somewhere else. But the idea being, when I have a team member start, they can see on day one where their future is and the exact steps they need to take to get there.
Right.
And once we have that in place, it's something that I'll be able to offer other accounting companies. And so, like, look, here's the framework of what we do.
Yeah.
Like, treat your accountants better. Give them this type of clarity on where they're going, so that we can keep good minds and all this energy inside of the industry, helping business owners, as opposed to them leaving and just working for one person.
Yeah. And equally, I assume onboarding, that will really help people onboarding as well.
Totally. Because now that onboarding stage, man, the team members feel so lost.
Yeah.
It's just a lot of information. So if we have a good structure on, this is how we introduce you to our culture, who we are, how we do things, and then how you literally technically do things, it makes for a better, enjoyable experience for them.
Absolutely. So how many employees are you at the moment?
35.
So what, 2 years, 5 years, you'll be 135?
Yeah, I think probably 80. I think in 2 to 3 years, probably about 80.
That's great.
Yeah, I mean, hiring is exhausting, especially right now in the current environment.
Yeah, but at least you can pick up some from the Big Four when they're burnt out and given up.
Yeah, totally.
Okay, we're coming to the end of the interview. I asked the same 6 questions to all of my guests. They're quick-fire questions. They don't need a quick-fire answer. First one is, what's the best decision that you made?
The best decision I made, other than getting married to my wife, was amazing. I think bringing on a leadership team.
Okay, interesting.
Not being the only person in charge, but having other people who now we can delegate, and just really good to have other minds helping me. And so now collectively we can take a vision and implement it together, so it's more efficient, because everyone sees things differently. And those differences, those crucial conversations we have, would never happen if I didn't have someone else to say, this is how I want to do it.
What's the structure? Do you have like a CMO and a CEO?
Yeah, so I got a VP over marketing. I have a tax manager. I have a bookkeeping manager. We have our office manager. So basically the supervisors of the company are all on the leadership team.
Awesome. I think that's really great. That's really smart. Second question is, what's the best piece of advice you've been given?
I've been given lots of good advice. I mean, obviously I mentioned go into accounting or business. That was great. But I think for me as a business owner, I mean, just take care of your employees was probably some of the best advice. If you take care of them, they take care of you, which then they take care of your clients.
Absolutely. I can't remember who said it, but they said that prioritize your employees, don't prioritize your clients. Because if you prioritize your employees, they'll look after your clients. So they're the people you should be looking after.
It's brilliant. Yeah.
It's so simple, but it's actually, for lots of businesses, they spend all their time on their clients and their employees feel disgruntled or not supported, and it can make a huge difference. So I think that's a great advice. Who's helped you most in your career?
My wife, definitely. She was really supportive when I came home and said, I can't work at Solence anymore. Like, it's just not working. And she almost slapped me and was like, it's about damn time you realize that. Because you're like, you've been miserable for like a year. So she's always been supportive of the decisions I make. I think it's important for us as entrepreneurs to have people who support us and don't try to talk us out of what we're trying to do.
Next question. Do you have any regrets?
Yeah. I've been involved in a few legal scenarios, and all of those scenarios came up because the legal contract was vague. So I regret not having more specific things in the contracts. I would have loved to avoid conflict whenever possible, or confrontation. But when you're creating the relationship, that's the best time to work through all the possible things that could happen. And you write it in your contract so that when something does happen, which of course would never happen, you actually have the plan already agreed to beforehand.
That's actually one of the things the Big Four do really, really well, is their contracts, because it's so heavily weighted towards the Big Four. It was actually quite interesting when you have other companies that get their lawyers and to seriously read it, instead of just going, oh yeah, it'll be fine, we'll just sign the document, when they actually challenge it, because the contracts are so weighted towards the Big Four. It's a really interesting area. I spent a year in risk management while I was at PwC, just on a sort of secondment, and the stories I could tell you about the sort of, there's not always issues. It's just sometimes it's being proactive so you don't have an issue within this sort of environment. But it's an interesting area. Always read your contracts, everyone. No matter what it is, you should. And
have them. Especially entrepreneurs, we trust the people that we know because we're risk takers. Not all of them are.
Yeah.
And if something goes a little bit awry from what they planned, if you don't have a contract in place, I mean, I've had years of friendship with people, and it turned sour immediately the second they weren't getting out of the relationship what they thought.
Right. Next question. What are you most proud of?
I mean, I'd have to say Incite Tax. If I started and thought it, like, I left Solence and went out on my own because I literally needed to put food on the table. I couldn't provide for my wife. We had one baby and she was pregnant. And so to think I went from a 10 by 12 room with no windows, just myself doing everything, to now I have 35 people and we're helping thousands of clients grow their wealth. I have to be proud about that.
It's amazing. What does legacy mean to you?
I think leaving an impression that actually changes somebody's behavior in a good way.
And who specifically are you thinking? Because immediately I start thinking, so obviously family, obviously employees, but do you mean clients? Do you mean everyone you meet? Do you mean?
I think anyone you come in contact with, if we're good people and we stand for good principles and we don't waver on those principles, because gosh, I mean, if people just only have their head in social media and are watching the news media outlets, those people are miserable human beings, even if they don't want to admit it. And I feel like you're constantly being under attack nowadays if you're trying to stand for something good. But if you stand firm, people will remember that. I actually had a high school guy found me. I went to a very small high school, and he sent me a message on Facebook like, "Hey, thanks for adding me." He's like, "I just wanted to let you know, like, you stood for something in high school that I didn't understand at the time, but I'm really grateful for it now because he could remember that example, and it helped him make, I guess, a critical decision in his life." To me, that's legacy.
That's amazing.
And we can do that. It doesn't matter who we come in contact with. People can remember us for just being a good person.
Yeah, absolutely. And the last question is, where can people find you if they want to reach out to you?
So our website is incitetax.com, and that's INCITE-TAX. Incite means to cause to action. Incitetax.com. In fact, if anyone's listening, we have a handout. If you go to incitetax.com/wealth, though we created 9 questions you can ask about analyzing your expenses. We've put it on just a fun little handout. If you go there, you can get it for free. That's probably, and then of course we have a great content on our blog. We talk about tax tips and cash flow strategies. But that's the best way.
That's amazing. Thank you so much, John. It's been an absolute pleasure. Thanks a lot.
Thanks for having me.
Cheers.